All right. We're recording now.
Hey y'all.
Hello, hello.
You want to give it a couple minutes?
Sure.
Yeah, we can start like what, like 7:05?
Yep, we could.
Let's do it.
Hmm, like my bookshelf. Hmm, the conference room. It's like a spaceship. Contemporary. Hey, hey.
I think we can get started. Are you ready?
Yes, yes.
Well, hey y'all. Thank you all so much for taking the time to be here. I'm Haille Baraka. I'm a realtor with Kinetic Real Estate. And then this is Shawn.
Hey, Sean here with Loan Factory, mortgage broker, licensed in California and Washington State. We're here to help you learn what you need to learn about being a first-time home buyer, the do's and the don'ts, and the whole roadway to get there.
Exactly. So the goal isn't just to help you buy a house. We're here to educate you, advocate for you, and help you build long-term wealth through real estate. So whether you're ready to buy next month or next year, we just want you leaving here feeling confident and knowing exactly what your next steps are.
Cool, cool. So there's a lot of questions, of course, people have about buying a home, where to start, what do I qualify for, what do they look at. So these are the main stuff, basically. So it's a lot of that information is determined based on your income, your debt that you have on your monthly obligations that show up on your credit report, down payment, if any, your credit score, the location, what type of a home you're buying, if it's a single family, condo, planned unit development, and so on and so forth. So the lender looks at those items and they determine what you would be able to qualify for in terms of dollar amount there too.
Yep. And one thing I always tell my clients is that just because you're approved for a certain amount doesn't mean you have to necessarily spend that much. We want your mortgage payment to
Right.
fit comfortably into your lifestyle so that you're still able to, enjoy life and handle other expenses.
Absolutely. That's a very important factor to keep in mind. Let's see here. So, as far as your credit report goes, a lot of us have tools that we have access to be able to see what our credit scores are, like Credit Karma or the old school annualcreditreport.com. So, you're entitled to a copy of that for yourself. You could see that. And to be able to see if there's anything that doesn't belong on there, you could have that removed, because ultimately the credit report agency's job is to keep accurate information on file for you. So if there's something wrong and doesn't belong, their job is to be able to remove that for you as you demand it.
Yep. And if your credit isn't where you want it to be at, I do offer Credit to Keys, which is a program that's completely free and no obligation. It's essentially where we go over what you know about your credit without running a report and creating a plan with you to get you in a comfortable place so that you're confident when you're going in to buy.
Yeah. So because sometimes if people's credit score, if they're a little bit lower and they need to be a little bit higher to qualify, um, you know what? Haley will be able to help you. Haley and her team will be able to help you get there. So starting to save early is great. We can use your own money. We can use your gift funds from parents, from family members, and so forth for down payment. And there's always been a myth in everybody's mind that we need 20% down. We need 20% down to be able to buy a house. That's not the case. That's not the case anymore. That's for sure. A minimum down payment actually is zero. There's a zero down payment DPA, down payment assistance program, available. Or if you wanted to do a down payment for first time buyers, which is a certain criteria you would have to fall within, and we can go over that in a one on one, is 3%. So 3%, to give you a perspective of what 3% is on a $600,000 home, that's $18,000. And that money could be a gift fund from a family member or your own money that you have saved up. And then relative to that, if you're looking at a $400,000 condo or a $300,000 condo, that could be close to $9,000 or $10,000 down payment. And then you have your closing costs, that which includes your taxes, your homeowner's insurance, any kind of appraisal fees. They could range anywhere between 2 to 5% of the loan amount, which you would be able to even use seller concessions for that purpose. What that means is that with the seller who's eager to be able to sell their home, they would be able to participate and give you money back to be able to use for that purpose, to be able to cover those expenses of your closing costs. We've done it in the past. We can do it again, and we can do it for you. So there's different types of loans for this wholesale or retail available. So wholesale, I'm a wholesale lender. So I have access to 240, 250 different lending institutions, and I will be able to get you the loan that suits your credit profile the best. Versus a retail location is a brick and mortar. You walk into it, and you would just say, "Yeah, I want to get a loan," but not everybody fits their criteria. You don't, not all of us fit in that box of the retail store. So they only have very strict guidelines, um, versus the lenders that I work with. They're a lot more lenient because this is all they do. They don't they only lend money for homes. They don't care about your checking account, your savings account, your IRA account, none of that stuff. All they do is lend money for homes, and that's their main purpose of being there is. And that's why they can be really aggressive on the interest rates and give us the best programs that are available to us. A few of the main points of working with Loan Factory, my company, is that we have super low interest rates because of the volume that we do. Of course, excellent customer service and availability. And we have a technology platform that is up above and beyond. The team that we have is there to be able to, behind the scenes, to be able to help you get to your keys as soon as possible and as easy as possible. So one of the main programs that Haley and I want to really emphasize about is the self-employed. So self-employed folks, you don't get a W-2, you don't, you have a lot of write-offs, so they'd fall in a whole different category. So our self-employed program, you don't need a W-2, you don't need pay stubs, you don't need tax returns. We have programs to be able to work around that. There are bank statement loans available, there's P&L loans, profit and loss loans available, which are a lot easier to be able to get help you qualify, and then these loans can close very, very fast. So our options available out there to be able to help you get to where you need to be with a mortgage loan, even if you're self-employed, and even if you have a lot of write-offs and you're showing your income to be really, really low.
Right, and that's huge for my small business owners, all my
Yeah,
people that are in nightlife, all my people that are in the music industry, things like that. This is huge for you guys, so definitely something to
yeah.
think about.
Recently, we helped a client who works for a food delivery company get a mortgage loan at a really, really great rate. Um, and they're in their home right now. So it's a beautiful thing. These options are available to us and for you to be able to get there. So some of the things you want to do before you shop is step by step, right? Of course, meet the right real estate professional, Ms. Haley. She'll be able to give you the support that you need to be able to look for the right homes. She has a platform. Then, if you say, "Hey, I want a three-bedroom, two-bath home, single floor or two-story," so she'll be able to. She has tools, access to tools to be able to serve you and put in front of you what you need to look for, what you're looking for. And you want to go through the pre-qualifications at least to know what you can qualify for, how much home you can buy. And then the next step after that is a pre-approval. A pre-approval is basically to be able to make sure you get a guaranteed a dollar amount that you'll be able to qualify for and be able to purchase a home for. Then you go have some fun and search for homes, right? This is the funnest part of the whole process. Like Haley
Sure.
will take you around and open homes. You look at this one, I like this one, I don't like this one. And, you go through your list of wants and needs, and you figure it out. You once you find the right place, you'll make an offer with Haley on that property, and or you negotiate on the contract. You go a little bit back and forth on the price and whatnot, and your offer will get accepted. Right, your accepted contract will go through the process of the nitty gritty. So basically, Haley will be able to make sure that the home is going through the inspection process, whether it needs it, appraisal process if it needs it, until it gets to the closing table. The closing table is when basically you would put the rest of your funds into the closing, and we'll be able to finish your transaction. And Haley will be able to hand you
Your keys, yeah. So I mean, like Shawn
right,
said, I'm as your realtor, like I'm opening doors for you, but I'm also educating you and advocating you, negotiating for you on your behalf, and making
100%.
sure you're protected during the entire transaction. So that's like what he said with the inspections, making sure you get the right inspections, pointing out things during showings that typically buyers don't notice, because a lot of the time there's a lot of things that I see that the regular person might not see, and
Right.
just making sure you understand every document you're signing and things like that. So it's definitely more to it than just opening the doors and looking at pretty houses, but that's the whole point of having somebody with the knowledge.
That's important. Oop. So here we go. So the process, why you want a pre-approval. The reason you want a pre-approval is because you want to make sure that your documents have been completely vetted, and somebody like an underwriter has looked at your income and has calculated your income, and we have a set debt to income ratio calculated. So you have what's called an underwriter pre-approval. Underwriter pre-approval has a lot of weight to it, and it has a strong offer when you're basically going in with an underwriter pre-approval offer. That way, the seller feels confident to be able to accept your offer, knowing that you've somebody at the bank level has already looked at all your documents and has approved you at the bank level. The pre-approval versus a pre-qualification. Pre-qualification is when you tell me I make X amount of dollar per month and I have X amount of debts per month as well. And based on that information, verbal information, I'll tell you this is what you could get pre-qualified for. But a pre-approval again is the way to go if you're looking to make an offer on your property that you love. And the documents that you need to provide are it's a short list depending on what type of buyer you are, whether you're a self-employed buyer or you are a W-2 employee buyer. So we need a driver's license or a photo ID. And if you want to use any money for a down payment, we need to show 1 or 2 months of bank statements showing where the money is. Also for income, if you're a W-2 employee, we need the W-2s or the 1099s. If you're self-employed, last 2 years of tax returns. If you're self-employed, or if you don't have that, or if they show too low, we'll go the bank statement route. And we need 30 days of pay stub if you're a W-2 employee again, and contact information for your HR for a verification of employment. So going shopping, looking for the beautiful home and going through the process with Haille.
Yeah, so like I said, when we're going through the process, it is a lot more than opening doors. I'm here to negotiate for you, to advocate for you. Buying a home is one of the biggest financial decisions that a lot of people make in their lives. So I take it very seriously, and my goal is to make sure that the process is as stress-free as possible and that you are you're happy with this life choice and life decision that you just made, because this is it's gonna essentially change your life forever. So it's not just it's finding the right home, not just any home, right? So sometimes like I said, there's things you guys don't notice that I do, so that's why I'm here to guide you.
Yeah, step by step of the way, we're there to answer questions for you and make sure that you're making the right decisions, because we have an obligation to be able to make sure you are protected.
Yes, sir.
Yeah.
And then, so once we found the right home, we're gonna take the time together to put together a competitive offer. So this is where strategy matters, right? Every market's different. Every seller has different priorities when they're selling their house. So my job is to study the comps in the area, which are comparable homes that have sold, understand the seller situation. So that's just where I come in as a realtor and communicating with other realtors, listing agents, and position your offer so that it's as competitive as possible. So in the end, you're not overpaying and you're getting the home that you want, essentially.
Yep.
So
Yep.
my job is just to negotiate the best possible deal and protect your interests.
So for the home sale. So part of these things, like Haille can explain what an earnest money deposit is. Oh, can't hear you.
Sorry. Yeah. So after your offer is accepted, you'll usually submit what's called an earnest money deposit. So think of it as showing it like that your seller is serious. So you're putting this deposit down, and it goes towards your purchase when you close. So like I said, it's a deposit showing your seller you're serious. So if you don't hold up your end of the contract that you signed with the seller, then that's the only time you would lose that money. Otherwise, it goes towards your purchase price and it just goes towards the transaction.
Right. It's basically it's your skin in the game. You're showing that you're serious about it, about their home, and you want to move forward with it.
Exactly. So then home inspections, like I kind of mentioned earlier, that's part of the process to protect you as a buyer, right? It's getting those inspections. It's super important, one of the most important parts. So I always encourage my buyers to attend their inspections if they can. But if not, that's totally fine because I can attend and then explain to you what the inspections say, because it is a lot of information. So we'll go through it together once we get it back, and then just understanding that understanding what's normal maintenance and what's an actual concern that could possibly get the price deducted on what you've offered. So from there, like I said, we'll decide whether you want to negotiate the repairs or negotiate the price. Or sometimes you can back out of a contract altogether if there's enough reason to.
Yeah. So if you put an offer on a property and you find something that is wrong with it and you're asking them to repair it, if they opt not to, you get your earnest money deposit back and
Yep.
you just, search for the right home.
Yeah, so that's one thing to point out too. If the contract ends up not going through because of the seller, then you do get your earnest money back. So that would be when you get it back too.
Correct. So the loan application, it's pretty simple process. This is like a paper version of it, but I have it online and I will be able to personally walk you through step by step to be able to fill it out. As a matter of fact, I like to get on the phone with my borrowers and be able to take the information and input it so we make sure it's done easy, correctly, efficiently, and it doesn't waste your time. Name, address information. There's a certain timeline that they want to see at least 2 years of job, at least 2 years of employment, and 2 years of residence. So we'll fill that out to be able to make sure that we have it all covered. Part of the question people have is that, my home value versus loan amount or equity. So your equity is any kind of down payment you put in. So if you're putting down 3% down, that's your equity in the house. The loan amount is the other 97% above it. So that the home value is the total value of the home. So if it's a $500,000 house, that's your total home value. And if you're putting 3% down, that's $50,000 equity you would have on it.
Yeah, so every mortgage payment you make goes towards your equity. So it helps you build the ownership in your home. So one way I like to explain equity is that it's the difference between what your home is worth and what you owe left on your mortgage. That's what your equity is, if you're thinking from like a math kind of equation standpoint.
And you got to keep in mind, you got to be making payments, you build equity in that, but your house also appreciates over time.
Exactly.
And you build wealth that way, and you build more equity into it faster that way than you would be making payments on.
Yeah, so a good example, sorry. I was gonna say a good example of that is like, say you bought a house for 600,000, and then after a few years you paid down your loan to 500,000. So that means you have 100,000 in equity, but then say your home value goes up that year to 700,000. So really your equity is at 200,000.
Right. Yeah, that's the beauty of it. So basically, some loan program options that are available out there. There's FHA, conventional, VA for veterans, USDA for properties that are off the grid, a little bit more of the countryside. There's down payment assistance programs that cover 100% of your down payment. Non-QM are loans that are for investors or self-employed people. And then there's commercial loans that are for bigger properties, multiple unit properties, multifamily properties, and so forth. So I will help you, guide you to see which one of these loan programs suits your lifestyle best and helps you the best way possible to be able to get you the lowest interest rate and ultimately lowest monthly payment.
Yep, there's no one size fits all loan.
No,
There's so many different options.
And speaking of the interest rates, there's basically two types, right? There's fixed rate, which is going to be the same rate from the day one until the last payment you're making 30 years from now, versus adjustable rate. Adjustable rate is something that could change based on the market, right? If the market is bad, the rate will go up. If the market is good, the rate will come down. Well, in order to prevent any kind of a fluctuations for your monthly budgeting, I always recommend wholeheartedly a fixed rate, because that way the market is not going to determine what your monthly payment is going to be. It's a set rate, it's a set dollar amount, and it's a fixed rate. And then you know what? When the rates drop, if and when the rates drop, you refinance it to a better rate. And if rates go up, you already have a great rate. So that way you don't have to worry about any kind of adjustment in your monthly payments.
Yeah, what's that saying? It's like marry the house, date the rate, marry the house.
Right.
Mm-hmm.
A lot of people say, well, I want to wait till the market crashes. And well, here's a sample of a snippet of a Zillow on a property in the Bay Area, right? And it shows 1965, 70, 75, 80, on all the way through. One thing is very consistent is the uptick. Okay, this property is only going up. So sure, there are little dips here and there, but at the end of the day, if you bought this 5 years ago, 10 years ago, 20 years ago, you would be in a nice equity position right now by hundreds of thousands of dollars. So this is going to continue. It's going to show 2030, 2040, 2050, and so on and so forth. So you want to be the one looking at this mark and 5 years, 10 years, 20, 30 years down the road and saying, man, I'm glad I bought this house when I did because look at that. It's only gone up higher and higher in value. So we're here to help you get there and to be able to start building that equity. Underwriting. So when your loan gets to the bank, the underwriter starts looking at it. So what are the items that they're looking at, right? They look at your income. How much do you make, right? If you're self-employed, they look at the bank statement. If you're a W-2 employee, they look at your pay stubs, how many hours you work, what type of property are you buying? Is it a condo? Is it a single family? The assets, if you have any money in the bank or not, if you even need money in the bank or not. Credit, how have you been paying everybody else? What is your credit score? So these are the main factors that they look at when they want to determine your rates and so forth. So appraisals, this is very important because you want to know the house appraises for what you're buying it for, and so does a lender, right? So they look at that. They also really request an appraiser, a professional appraiser, to go out and look at the property and give us their opinion, their professional opinion, based on other homes that sold within the certain radius of that property. What are the which are called the comps, which Haille would be able to show those to you that when you're making an offer to make sure you're making a fair offer. And then this takes about maybe 4, 5, 7 days to get that done. Um, and they want to make sure that your purchase price is within the range of the appraisal. Appraisal comes back higher, even better. But if the appraisal comes back lower than what you offered, then Haille jumps in. What would you do, Haille?
I would come in as your agent and renegotiate the price. I would just come in and renegotiate for either for the price that it's appraised for or less, depending on what the inspections came back with, right? But if
Right.
it is over, you're not going to say nothing because that just means that you're going to go into it with even more equity than you thought.
That's right. That's right. Yeah, exactly. If it comes back lower, that opens up the doors for negotiations. And if they don't want to negotiate on the price, we don't have to. We'll take your earnest money deposit back to you, and we'll look at another property that'll suit you better. But majority of the times, at 99% of the times, if the appraisal comes back lower, it means that the seller was on a high horse maybe, and they set the value too high, and then that'll bring them back a little bit more into reality, and they'll adjust to their appraised value, and we move forward with your purchase process.
Especially right now, we're very much like in a buyer's market, so there's a lot of room for that, especially if the appraisal
Yep,
comes back. It's pretty rare right now in the market that we're in currently that a seller is gonna fight the appraisal.
100%. So clear to close was music to my ears. That typically takes about 3 weeks after the acceptance of your offer. Your closing agent or the escrow officer will prepare the documents between the lender and everything. Takes about a day or two. And you work with me to make sure we'll synchronize time so you can get over to the escrow office to be able to sign your documents. Signing day, aka as key days. So signing days get followed by key days. So
Yep.
signing days take about a couple of hours, maybe. You get to read, and the escrow officer will show you all the things you need to sign. Um, actually Haille will be there, and I make every attempt to be able to be there as well for your signing event, to be able to make sure if you have any questions we could answer for you. Generally, by the time you get to that point when you're signing the loan docs, I have done a great job to be able to explain everything to you, so usually there's no questions to ask, but I always like to be there to be able to answer any questions that do pop up.
Yep, exactly.
And if you're not available to come into escrow office to sign it, we can always send a notary public to your home, to your office, to Starbucks to be able to sign the paperwork with you.
Yep. There's always a way.
Yes, yes. Some of the things they want to verify you are who you are, who's signing the document. So, of course, a valid government ID would be handy. And if you're doing a cashier's check for your closing funds, a cashier's check or gift fund, of course, no cash. We cannot bring cash to the closing table.
And no personal checks. Oh my
Yeah,
gosh.
yeah. Personal checks would take longer to clear, so cashier's checks are always better. Or you wire the funds in. Again, we're here to help you. We'll help you when your time comes and when you get there.
All right, and then closing day / key day. You know, this is
Mhm.
my favorite day. This is the day I get to hand over the keys to you and celebrate with you. Um, Seeing someone become a homeowner never gets old, especially with first-time home buyers, right? Like I said, this is one of the biggest purchases of their lives thus far, if not for their whole life. So it's really important to me, and it's important that our relationship doesn't end after closing. So if you ever need like contractor recommendations, cleaner recommendations, really anything.
Gardner.
I'm well connected, so I definitely, if you need anything, even after the transaction, I'm here.
Absolutely, absolutely. Yeah, because we're gonna stay in touch with you. The relationship is just now starting because if and when the rates drop, we want to be there for you to be able to help you refinance it, get you a lower interest rate, and to be able to save you more money. And at some point, you want to maybe add another property to your portfolio. Haille would be able to help you with that as well.
Exactly, exactly. You might build up equity, depending on what kind of property you buy. You might build up equity, and in 2 3 years, want to sell and buy something else bigger and somewhere else better.
Absolutely. Always,
So that's the
lifestyles
whole
are
point
always
with real
changing.
estate.
So good.
Yep, real estate's always changing. Prices are always changing, and with your equity, with buying a house, you're building equity. You're building your assets that you can use to purchase other things down the road. So
Oh, yeah. Any questions, you can always go to do a one-on-one with us and schedule a private meeting. Contact us. Our phone numbers are actually on the last page, so you can always reach out to us and give us a call. We're available. You can text us, and we'll be happy to connect with you. Do a one-on-one. We can meet at Haille's office or my office or even at your local Starbucks or Pete's, whichever one you like. And we'll get a cup of coffee and talk about your scenario, because everybody is, like she said earlier, like Haille said earlier, everybody's case, it's case by case, and everybody's case is different. So we want to make sure that we can customize it to you and answer your questions and take care of your needs.
yeah, I mean, I can't say it better. Whether you're 6 months away or a year away or 5 years away, I want to answer, and Shawn wants to answer any questions you have. So yeah, thank you so much for
Absolutely.
your time and being here and listening. And we're always here.
Thank you so much. Cheers.
Thank you guys. Thank you.
Bye.